Hello everyone and welcome back to another video. Today we are going to be looking at another trading strategy on the site TradingView.com. This strategy is very simple and can be used by traders with any skill level, but I do recommend this strategy to newcomers that are looking to develop. The strategy uses a vast range of technical indicators built into one indicator. Here is the list of technical analysis indicators that just this one indicator uses to provide signals for you. Okay, now let's add this onto our chart. Head over to the Indicators tab and type in Neural Network, created by Unknown Unicorn. Now that is done, minimize the strategy tester window that pops up when you add the indicator to your chart. We will be looking more into that in another video. But for now, let's head into settings. This indicator has a large variety of settings that I encourage you to take a look at yourself, as these settings might need editing, depending on what product you are trading, and which time frame too. Head over to Style, and remove the week long and short triangles. Remove the Tables option and the Trades on Chart option. This indicator does support automated trading, but for now, let's test this ourselves. Okay, for our last change, let's go to Inputs and enable the option to only trade with the trend. This setting enables the indicator to only give us long positions when we are above the trending exponential moving averages. And it will only give us short positions if we are below the trending exponential moving averages. Now we have clarified that, let's head on over to some long examples. But first, we will be needing to change a few more things to our chart. First, we should change our candles to Heikin-Ashi. The neural network provides greater accuracy with these candles. We should also be changing our time frame to 3-minute candles. Please remember, the accuracy of the 3-minute candles may vary depending on the product you are trading, whether it be crypto, commodities, stocks, forex, or indices. We require two things from our chart for a long position to be valid. The first requirement is that the HMA line displayed here must be colored in blue. This gives us confirmation that the trend is bullish. The last requirement is that a long signal like this one has been printed. We don't need to worry about if the chart is above or below the 200 EMA line here, because we have set up our indicator to only provide a long signal when we are above the line. Now we can take a long position at the close of the candle that provided the signal. The stop loss should be set just below the signal banner here, and we are setting our risk to reward ratio at 1 to 2. Let's do another long example. As you can see here, our requirements are met. The HMA trend line is colored in blue. And our long signal has been printed. Now we are clear to take a long position. Set the stop loss just below the signal banner that was provided, and we are setting our risk to reward ratio at 1 to 2, like before. Let's give one last long example. Here we can see again that the HMA trend line is colored blue. And our indicator has provided us with a long signal. This allows us to take a long on the candle close of the buy signal here. We set our stop loss just below the signal banner that was printed here. And we are looking for a risk to reward ratio of 1 to 2, just like our other trades. Now that we have clarified how to take long positions, let's take a look at some short position examples with this indicator. We require two things for our short entries. The HMA trend line must be colored in red like so. We must also have a short signal that was printed by the neural network indicator like this. If both of these requirements are met, then we can take a short at the close of the valid candle. Just like the long positions, we are targeting a risk to reward ratio of 1 to 2. And our stop loss is going to be set just above the signal banner here. Now let's take a look at another example. Here we can see that the validations for our shorts have been fulfilled. The HMA trend line is red. And our indicator has signaled a short. So we can take a position here, setting our stop loss just above the signal banner and targeting a risk to reward ratio of 1 to 2. Time for our last short example, and then we will backtest this strategy to prove its profitability. Here we can see that the market is heavily downtrending. The requirements for our short entries have been met in the process. The HMA trend line is colored in red, and our indicator has printed a short signal. So, we can take a position here, setting our stop loss just above the signal banner. And like the others, we target a risk to reward ratio of 1 to 2. Okay, now that we have run through our examples, time for the back testing of this strategy. The indicator has proven its effectiveness well so far, but let's test the true consistency of it, and make sure that it can be used for a real account, with real capital, at real risk. I advise you all to do the same when backtesting strategies, making sure your plan is effective long-term. This test was done on BTC against the US dollar, traded on the 3-minute time frame as displayed in our long and short examples. I risked 2% per trade, and traded 200 times. As you can see, the strategy proves to be very profitable. Let's run through the statistics shown here. The gross profit acquired on this $1,000 account turned out to be a promising $7,495, with a percentage gain of almost 750%, which is incredible. Our win rate was 52%, which is low, but I do expect this without any strategy enhancements. And as you can see, our best winning streak was 6. Without worst losing streak being 8. With a win rate percent like this, it leaves room for improvement for sure. So, let's get back to TradingView to enhance our strategy. This indicator is good, as it takes use of some of the best technical analysis indicators the trading world has to offer. But one thing this indicator doesn't use is a primary volume algorithm, which, in my opinion, is why the win rate percent is lacking slightly. So, let's fix this now. Instead of using a traditional volume indicator, I suggest something similar, but more effective. Head over to Indicators, and type Volume Oscillator. Let's add this to our chart, and change some settings. First, head over to Styles and switch the plot to white. Next, change the 0 range to 25. Okay, now that is done, let me explain why this can be helpful to increase win rate percent. See these signals? They are highly inaccurate. This is never good for when we are backtesting, as signals like these decrease win rate percent drastically. However, to detect false signals like these before we take the entries, we can look down at our volume oscillator to prove whether they are really the right idea or not. This position here tells us to buy in. However, the volume in the market is well below what we desire from taking a trade. We should aim for our volume oscillator to break above the 25 range that we adjusted in the settings. If it does not, and continues in the opposite trend direction, we have a false signal. This is an example of a valid signal that can be executed under the rules of the volume oscillator. Our neural network indicator tells us to go long, and our volume oscillator here is above the 25 range. Volume is bullish, and the market is in an uptrend. Therefore, we are clear to buy. I hope this video has helped with your knowledge of this indicator, or if you are new to this indicator, I hope you can take advantage of its effective properties and use it for your own. Don't forget to always stay patient, manage your risk, and keep consistent. Anyways, traders, thank you for taking the time to watch this video. Good luck with your trades, and I will see you all in the next video.